The Bitcoin cryptocurrency has experienced one of the sharpest drops in 2025 years. Since October 9th, the exchange rate has dropped by 17% from $123,000 to a minimum of $102,000. Analysts noted that subsequent events showed that behind the usual correction there was a massive capitulation of retail participants and a large-scale outflow of capital from ETFs. Experts assured that they had studied Binance's data. According to them, they demonstrated that on October 11, retail investors sold over 18,000 BX, a record volume since the end of July, when the figure reached 14,000 BX. Most of the sales were in the range of about $112,000, which meant a loss of 8 to 10% from recent highs. The sales followed immediately after the collapse on October 10, when the liquidation of long positions in the crypto market exceeded $16 billion, the largest figure for the year. Meanwhile, institutional flows have increased pressure on the market. According to the data for October 14, the cumulative negative inflow of funds into Bitcoin ETFs exceeded $2.8 billion. The BlackRock, Ibit, Fidelity and Grayscale funds became the leaders of the outflow. Such movements often mean the return of Bitcoins to exchanges for subsequent sale and a subsequent short-term decline in prices. The researchers stated that despite the large-scale sales, activity in the stablecoin sector indicates the opposite trends. In the period from the 10th to the 15th of October, the total volume of USD issuance amounted to $3 billion, which may mean an influx of new capital into the market. At the same time, the release of stablecoins based on Ethereum significantly exceeded the performance of the Tron network, which indicates an increase in liquidity on trading platforms. Experts assured that historically, such an increase in the issue of stablecoins after a correction often heralds the beginning of a new stage of accumulation. If this trend continues, the market may move towards recovery in the coming weeks, despite the current signs of fear and instability. The analytical platform Sentiment has published a list of the most discussed tokens in the crypto community. The leader was the topic around PYUSD, a stablecoin from Paxos, after the company mistakenly issued $300 trillion worth of tokens on the Ethereum blockchain. This caused shock and a wave of discussions, but the Paxos leadership quickly destroyed the excess assets, stating that an internal glitch occurred without data leaks or risks to clients. Ethereum also became one of the main trends on social networks. Reports mention large deposits from the Ethereum Foundation Fund into DeFi storages, growing institutional interest, and inflows into ETH, which has outperformed similar products on Bitcoin in terms of pace. The project remains a center of innovation thanks to Scavell and new initiatives on digital identifiers and cross-chain interaction. Bitcoin holds investors' attention amid discussions about the coin's dominance in the market and the role of the main virtual asset. Discussion participants compare BX to gold and traditional assets, noting the growth in capitalization and steady institutional interest. At the same time, some analysts predict a return of funds from altcoins to BX and ETH. The stablecoin Tether also entered the top trends of the last day. Messages concern its influence on crypto market liquidity, reserve structure, and constant debates about centralization. Discussions intensified against the backdrop of large USD issuances and the emergence of fraudulent schemes imitating Tether support. Among the trends was also the Moned token, distributed through Telegram bots. The free giveaway of coins caused a sharp increase in interest and audience engagement, especially among users seeking early opportunities on new platforms. Finally, the AIM topic remains in the spotlight due to ongoing investigations, lawsuits, and discussions about the role of the exchange's collapse in regulatory changes to the crypto market. The community actively discusses the organization's bankruptcy, political consequences, and the importance of self-custodial solutions after the platform's crash. Ethereum's price shows a rare technical signal. It was last recorded 6 months ago, when the token rose by more than 80%. Currently, ETH is trading around $4,020. The coin has decreased by 1.8% over the last 24 hours, by 8.7% over the week, and almost by 10% over 30 days, indicating a downward trend. However, fresh on-chain data and a rare pattern suggest that the decline may soon turn into a new wave of growth. The Relative Strength Index, which measures the speed and strength of price movements, shows bullish divergence. This happens when prices form lower lows, while RC forms higher ones. The pattern indicates weakening selling pressure. Bullish divergence often signals a possible reversal and may mean the end of the downward trend. Last time, Ethereum demonstrated such a pattern from the 10th of March to the 21st of April, when the coin rose by 84.46%. Before that, Ethereum was in a similar decline phase. Repeating the situation now may indicate an imminent reversal of the current trend. Large Ethereum holders seem to be preparing in advance for market changes. On-chain data shows that they increased their reserves from 100.36 million ETH to 100.51 million coins. This is equivalent to buying about 150,000 Ethereum for $603 million at current prices. Ethereum whales continue to accumulate. Although the pace is slow, accumulation indicates that large players are restoring positions while the market has not yet stabilized. At the same time, the change in net position on exchanges, which shows how much ETH is moving to or from trading platforms, increased from negative 1.55 million ETH on the 10th of October to negative 1.94 million ETH on the 15th of October. Growth in buyers' interest in ETH. The negative value indicates that more coins are leaving exchanges than entering them, which is a sign of growing buying interest, as investors transfer assets to long-term storage. The growth in outflows by 25% is the highest since the 25th of September. Along with the accumulation led by whales, this situation may foreshadow possible growth in Ethereum's price. Ethereum faces resistance around $4,076. If the price breaks this level, it may reach $4,222 and $4,557. Closing of the 12-hour bar above $4,076 will confirm the strength of the bullish signal and open the path to $4,752 and $4,947, where the historical maximum is located. On the other hand, Ethereum support is around $3,952 and $3,877. If these levels are lost, the price may fall to $3,640, which will cancel the bullish trend. Currently, the situation with Ethereum looks optimistic thanks to three factors: RC divergence, accumulation by whales, and growth of outflows from exchanges. If the price overcomes the levels of $4,076 and $4,222, it may repeat the bullish trend that started in March, which turned the downtrend into a multi-week rally.